I hope everybody's here. Welcome, to listen to the webinar about the economic injury disaster loan, or EIDL is what we call it. This program tonight, when we're going to talk a little bit about this, we're not recommending that anybody fill out for this EIDL loan. It's just a program that's out there. And when this program first came available through the CARES Act, it was actually thought that ag enterprises were not eligible for this EIDL loan. And then somebody had a change of heart or something other. Anyway, a short story is that agriculture did become available or eligible to use this. And so we thought we'd go ahead and talk a little bit about this. This is just another tool to help y'all kind of get through this COVID-19 pandemic that we're going through. And I decided I'd go ahead and just bring an expert in to talk about this. And so I brought in Mr. J.C. Hobbs. J.C. is our farm management taxation specialist here in Oklahoma, and he does a lot of work on these type programs. So with that, I'm going to go ahead and kind of mute my microphone and go to Facebook Live. But if y'all have any questions, there's a couple of ways you can do this. If you don't feel comfortable, and you don't have a microphone, you don't want to talk, you can type your questions in the chat box down below, and we'll answer your questions as we go along. Like I said, if you've got a microphone, you can speak, and you can go ahead and ask the questions directly that way. So with that, JC, I'm going to turn it over to you.
Thanks, JJ. Well, as he said, this program has had some misunderstandings, some confusion, a lot of other things. So we're going to kind of clear up some of that and show you why this thing's a benefit to producers and why they should really think about using it, or at least have a better understanding of why it's of benefit. So what it is, it's called the Economic Injury Disaster Loan. It's designed for small businesses. And when you look at what was done, it was set up through SBA, Small Business Administration, but their original, or the way they're set up, they've got disaster loans for small business, but they don't really have any dealings with agriculture. When the EIDL program was set up, it was designed to be for both small or all small businesses. So agriculture was supposed to be in there, but if you looked at the language in the original, it could have been, it was construed that it didn't. Another reason it happened, if you look at the second bullet, agriculture been traditionally serviced by USDA, FSA disaster programs. So for the most part, traditional agriculture was left out of the provisions, that being your crop production, livestock production, etc. Greenhouse operations, they were in the qualifying area. Also ag cooperatives were written in. So now when we look at what's going on, agriculture qualifies as long as there is not a similar relief program from USDA. So if USDA is a program that's covering the same areas as SBA, you're not allowed to dip into both. SBA drops out and you have to use the FSA disaster programs. So what we have now, if you look at the EIDL, there's two major pieces. There's a loan advance, and it's an amount up to $10,000. It's created as a grant. If you'll look at it, it's designed to be received within 3 days of application. And in the application, in order to make this work within that 3 days, the application requires that you put in your bank routing number and your account number. Once you do that, the loan advance comes to you. It can be up to $10,000. It doesn't have to be. Usually the small end of it's $1,000. So you can see a range from $1,000 to $10,000 as the amount of that $10,000 advance payment. When you get that, well, you're not required to repay it. Even if you're later denied an EIDL loan. So it's a grant, you get it. If you get denied or you decide not to take the EIDL payment or loan program, you get to keep that grant. It's not taxable, and again, don't have to repay it. if the applicant receives a PPP loan, that's the Payroll Protection Program loan, and then applies for EIDL and then gets that, there are some interactions. So the EIDL amount has to reduce the amount of the PPP loan that's forgiven. We're not talking about the Payroll Protection Program tonight, but basically you want to make sure a lot of farms do not qualify for the PPP loans. One is, the factor is we don't have any employees, because that's one of the pieces of the puzzle for that Payroll Protection Program. You have to have an employee, one or more. The EIDL payment, well, it can be used to cover costs that can't be covered due to a reduced income. So if you're looking at the EIDL program, it's covering employee sick leave, payroll, increased material costs of the operation, rent, mortgages, or other obligations. And we're talking rent or the mortgage portion of it. It's not the loan repayment. It is interest on existing debt. Now, the EIDL program, it's available until 12/20/20. The problem is the loan applications are due, or your application for the EIDL last date is September 30th. So if there's still dollars available, you can apply up till September. However, you want to really look at this thing. Right now, if we look at what's been added to the EIDL program and the number of applications that were already in the mix, and currently on farms that weren't in the mix originally are now the only ones being allowed to apply, it may not last much more than maybe another month or so before it runs out of funds, unless Congress decides to put more into it. And that's going to be anybody's guess. Now, the eligibility requirements, small businesses, by definition of Congress, they said no more than 500 employees. So all farms, for the most part, are going to fit right under there. It also allows individuals operating as sole proprietors or independent contractors. So a farmer, as a sole proprietor, you can get one of these EIDL payments, not a problem. What they look at for the grant portion is the number of employees. Well, if you're a true sole proprietor, you by yourself, you're going to get to $1,000. If it's a husband and wife qualified joint venture, both parties will work, you get $2,000. So you can kind of see how this thing applies. So it's per individual employee. A sole proprietor is a wage earner or a self-employed person pays self-employment tax for the farm. He does qualify. She does qualify. Again, cooperatives, small ag cooperatives, less than 500 employees. Also, you'll notice there's tribal small businesses. And then if you really wanted to know what other items, I went ahead and included this, but for the most part, all farms do qualify. I have run into very few that have more than 500 employees. So in agriculture, well, what we've looked at is production of food, fiber, ranching, and that was in the CARES Act, but it was accepted. In other words, farmers weren't allowed. Now, as of May the 4th of 2020, we proved that Congress did have intent to include agricultural enterprises. We've been included. It opened up on the 4th of May. We've been taking applications and they've been coming in like crazy. So what are the terms? Maximum of $2 million depending upon economic injury. Recently, there was a piece put out by the director of SBA saying it was going to be a max of $150,000. Congress basically said, no, that's not the intent. You can't change the legislation. Maximum of $200,000. If you come up and you get $150,000 as being your max, when you go to your lender and get the rest of this thing finalized, you can request that to be enlarged. Most of the time, our farmers will be less than 150,000. I've been hearing anywhere from about 125 and less. So 125,000 and less for most farm operations. If you look at the loan portion is not to be forgiven. So the grant, which is up to that 10,000, that's a grant. You don't have to pay it back. If you qualify for the loan, you will get an email or a letter telling you how much more you qualify for. They'll give you a range, the maximum and a minimum that you qualify for. You don't have to take the max. You can take something less than that if you so desire. But again, it's not forgiven. The interest rate on that, though, is 3 3/4%. Pretty good rate. Also, there's an automatic 1-year payment deferral so that you don't have to make a payment for 12 months after you receive the loan. However, interest starts accruing immediately, even though you don't have to make a payment. So you don't pay back any of that accrued interest until you start making loan payments. So you get 1 year of relief on your cash flow from interest. Maximum loan term, well, that was 30 years, and it originally said SBA had the ability to reduce that over a shorter term. However, if you look at it, currently, what I've been reading and hearing, they're not even looking at trying to figure out what the payment period should be. They're just automatically stamping that you're going to get a 30-year repayment plan. So for the most part, I haven't seen anything where they're adjusting that down. So I would be very much surprised if you don't have 30 years to pay it back. More of the terms, if the loan is less than 25,000 or less, you don't have to secure it with collateral. In other words, it's just there. When we get above 25,000, it has to be secured with business assets, that being the collateral. If the loan is more than 200,000, there has to be a personal guarantee. And if there's anything between or less than 200,000, you don't have to personally guarantee it, even if you have to have collateral assigned to it. So, 2 parts. If it's more than 200,000, you have to have a personal guarantee on that loan. Less than 200,000, you have to have it collateralized. 25,000 or less doesn't have to be. So those are the 3 numbers you really want to work from to get an idea of what the rules are.
JC?
Yes, sir.
One thing that they mentioned too is SBA is not real picky about what lien holder they are. They're not going to try to be first or even second. They could be third, fourth. As long as there's collateral left on the asset, they don't really have to be first lien holder on any collateral given.
That's correct. Thank you for adding that. So the allowed uses. So if you've got employees, they take sick leave, you can cover that. Payroll costs, that's an obvious. Some of the not quite so obvious, accounts payable. So if you buy feed and it's on credit, those would be accounts payable. You can pay that with EIDL loan dollars. Operating expenses, feed, supplies, materials. Now, one question came up not too long ago. I'm in a storm, it tears off the roof on my barn or rolls up some of the tin. I need to replace the tin. I buy those materials. That's not going to qualify. When you're talking about materials, they're talking about really operating type items, not for repairs due to damage to a storm. The reason for that, depending upon if you get a federal disaster declaration or you have insurance dollars, those declaration dollars, FSA would recover that. So you can't use EIDL for those pieces. Rent. So if you're paying rent, land, etc., that can be used, or EIDL funds can be used for that. On fixed debts, well, that's being mortgage interest, other interest payments, interest on operating loans. It just can't be principal, and it also can't be any prepayments. So you can't prepay feed, etc. It has to be, or prepay debt payments, it has to be what's there in terms of mortgage interest as it's due or other interest. Other obligations that are business type obligations are also allowed.
JC, also talking about loan, you can't use it to borrow or to buy any more assets.
Disallowed uses, EIDL cannot be used for business expansion. As JJ just put it, buying additional assets. In a moment, we'll get into one thing that was brought up as a question, and I have yet to get a good answer. But business expansion can't work. Cash dividends or bonuses to your employees? No. To yourself? No. Paying officers and owners of the business, unless those items are directly related to services performed in the course of the business. Now, I've got 2 bullets that follow up. Questions about use. This question came to me. Can money be used to purchase replacement heifers or any replacement breeding animals? If you look at the rules, and to me, this is kind of a stretch, but it says if it's regular, customary, recurring, ongoing, etc., those are the terms used. Here's what they told me. Basically, if you're buying replacement heifers and you typically buy 10, 25, whatever number is annually, and you can prove that you always buy that many replacement heifers as an operating expense, they indicated that that should qualify. The problem is, though, given current cattle prices, if you wanted to expand, that comes back up to that first bullet we talked about at the top, business expansion. You cannot use those dollars to buy extra cows. The question that comes up, if audited, what do you do? I would make darn sure that I covered myself. The other point is, use these dollars to pay operating expenses, free up some of that dollars you've got in your bank account, and buy the heifers from there. That's just my opinion. But the rules state regular, customary, recurring, ongoing expenses are allowed to be paid for out of idle loan funds. Now, one of the things that comes up, well, I've got a PPP and I want to do the idle. Yeah, you can apply for both. Funds can't be used for the same purposes. So essentially, if you can't use them for payroll, you can't use funds from the PPP for operating expenses, and then use the idle loans for the same operating expenses. One of the things that has been recommended, it's not required. Using a bank account, and I'll talk about that in a moment, but set up a separate bank account because you've got to document the uses of funds from each loan. And you definitely want to make sure that you use those idle funds, PPP funds, for the items that they're supposed to be used for. So if you're getting both an idle advance, that $10,000, and you use it for payroll because that's where it came from, and you get a PPP loan for payroll, the idle advance reduces the amount of that PPP loan that gets forgiven. Remember, idle doesn't get forgiven. It has to be paid off. Just that advance doesn't have to be, but since it would be used as the same thing as the payroll protection program loan, they call it that same use. It reduces the idle amount that's then treated as a grant. So you've got to do some planning, got to do some thinking. Like I said here, the PPP first, then consider the needs for idle because it's a second player. Idle applications come from SBA. PPP application comes through the lender. Now the idle application, there's where it is. Write that down. So if you're going to go get an application, it's under the COVID-19 relief.sba.gov. Now interest rates, what makes the idle so nice? Now the Paycheck Protection Program is a 1% note. However, it's limited to 2 years. You have to pay it all back within a 2-year span. The amount that you have to pay back only charge 1%, but you're going to have a very short amount of time to repay it. Idle, 30 years at 3 3/4. So if you're looking at comparing this to the farm operating or farm service agency, yeah, idle, you're going to have a little bit more expense on the interest in the operating loans or the micro loans, but not all that much. You've got 30 years to pay them back. If you look at the emergency loans, other ownership loans, or even SBA loans, the idle is a much preferred rate of interest. And again, 30 years to pay it back.
Also, JC, there's no penalty for paying it off early. You don't have to take 30 years to pay it off. And
Yeah,
the
there too.
operating loans and micro loans for a FSA are a maximum of 7 years.
Thank you. Yeah, the idle, pay it back as quick as you can, get rid of the interest expense, etc. Here's kind of an idea of what that looks like. Farmer receives an idle and a PPP loan. You refinance the idle. Loan term on that set to 2 years because it has to roll into the PPP loan. Consequently, you can see the lower interest rate one versus 3 3/4. Again, a shorter term. Proceeds from the advance up to that 10,000, it gets deducted from that loan forgiveness amount of the PPP loan. But again, most of our farmers, and this is where I want to go for it at this moment, most farmers, if you look at the amount of money that they get to the PPP loan, it is pretty darn tough because most farmers have very little farm income over the last couple of years. And we're looking at net farm income for the PPP loans. So those payments, et cetera, a lot of farmers fall out of that one. We look at the idle, most farmers will qualify. Now here, looking at the application, just to give you an idea of what the front page of it looks like. You're going to start through, and it's those radio buttons, and you start clicking on them. And you'll have to go clear to the end. There's 5 buttons you walk way through where you've got your disclosures, and we'll show you those, your information, additional information, and a final summary that we won't get into. But it's a fairly streamlined process, doesn't take much time, and is definitely worth considering. So you have to consider your eligibility verification. You've got to select one of these, about 9 different buttons. Only one of them do you need to worry with, and that's the second one. I'm an ag enterprises. I do not have more than 500 employees. The next thing you're going to look at is making sure that you check that you're not engaged in illegal activity, no principal of the applicant with 50% or greater ownership interest in or his delinquent 60 days on child support. Applicant does not presently live or does not present live performances of, sexual nature, you read through there. These are the things that you cannot do. If you don't check one of those buttons, you don't qualify.
JC, you might be mentioned if you're in the cannabis business, even if you're not applying for that business, you still do not qualify because federally that is still illegal. And so it doesn't matter if your state's legalized it. It's even medical marijuana here in Oklahoma, you would not qualify for this idle.
Thanks again. So as you get to the second part of the application, you're going down through there, we're getting into the business legal name. Now, question comes up. I don't have my business legal name. I don't really have that. Put in your name and your spouse's name or your tax, what shows up on your Schedule F of the tax return. That is the legal name of your business. Trade name, again, it's required. It's probably going to be the same name as you have in the top, business legal name. Doesn't have to be, but that's the easiest. That's most often the case. Your social security number or your employer identification number is needed. Organization type, there's a drop-down box there, sole proprietorship, partnership, etc. That button, again, is required. Then you've got to look at, are you a nonprofit? No. Are you franchise? No. Then we get into the more meat, gross revenue for the 12 months prior to the date of the disaster. What it says there, you're looking at January 31st of 2020 and the prior 12 months. So the application period, we'll go through this again in a moment, you're looking at information, gross revenue starting February 1 of 2019, going through January 31 of 2020. Therefore, you're not going to be able to use your simple Schedule F that you apply or have that you'll file for 2019. You're going to have to subtract off January of 2019 and add to it January 31 expenses into the system. Same thing with cost of goods sold. Now, cost of goods sold, the next line down, basically is items that you buy for resale. If you're looking at what most often occurs here, that's stocker cattle. I've seen stocker sheep, etc. go in there. It's an item that you buy and you're expecting to resell within 12-month period. That's cost of goods sold. The next one talks about rental properties. If you've lost rent, put that in. So if you have land that you rented and you didn't get paid for it, lost rental income is included here. I don't see this very often. The next line says nonprofit or ag enterprise cost of operations. Now remember what I said. The items with the red bar are required. If you look at those that do not have a red bar on the left-hand side, you do not have to add that information in. So you don't have to put in your cost of operations for the prior 12 months. This is where, when I said earlier that if you look at the PPP loans, they go off of net farm income off the Schedule F. Idle, they want to know what your gross revenue is, less your cost of goods sold. They could care less about net profit. But if you include, if your Schedule F shows a profit, you may want to go ahead and put this in there. Your loan application or your loan amount will probably be larger. Again, it's not required. The next line talks about compensation from other sources. Were you paid due to the disaster for anything during that period of time? No, more than likely that's going to be zero. Don't have to provide a description or anything like that. Now, the primary business address, that's your mailing address, city, state. Don't worry about county. They just want to know where you're at and who has to, what SBA office will be working with your loan. Business phone, email, etc. on down through the list. Number of employees of January 31, 2020. Most of the time, if it's a sole proprietor, that's going to be one. Now, let's
JC,
talk about this expense items. Okay, JJ, you got a question?
Well, just back on that, a number of employees, you can, if it's a husband and wife team, can't put two down there as well. And that affects that initial bonus money that you talk about getting that's not, that you don't have to pay back. So you can.
Advanced dollars.
Yeah, the advanced dollars. So you can put two down on the husband and wife operation.
And that can be helpful. Again, that's another $1,000 that you get. So let's break down where you're going to find this information. So we're a farmer. Our gross revenue, that's Schedule F, line 9. Again, you're going to have to subtract off January 1 through 31 of 2019 and add to it expenses that you've got for January of 2020. Same thing for cost of goods sold. That's the big number from last year's Schedule F, line 1B. Again, adjusted for January of 19 and January of 2020. Now the cost of operations, and this is where it gets a little bit interesting. Cost of operations, that's line 33. That's net farm income. Again, like I said on the entry screens, it's not a required entry. But again, you're dealing with the same time span, February 1, 19, January 31, 2020. Cost of operations, if you've got a negative Schedule F, becomes an issue. If it's negative, then what you end up getting is $1,000 as a self-employed individual. As JJ states, you put husband and wife, it's $2,000. So you're going to get something even though you don't have a positive number for net farm income. One of the questions that comes up or came up, what about depreciation? Depreciation is a non-cash expense. So in the past, you've taken large amounts of Section 179 expensing election, or you take the bonus depreciation so that you can take and don't have to pay as much income tax or self-employment tax, and you knock down the amount of the operation in expense. Was larger, you pay less tax. Same thing with operating interest. Lenders, when they make out a loan application, you go into their office and sit down with them. They look at the cash flow. Since depreciation is a non-cash expense, operating interest basically comes out of the fact that we need to borrow money for operating expenses. They often will adjust for those two amounts. When you get your loan information from SBA, you go to the lender and walk through the process. If you get denied of any income or any extra loan amount, there is a chance that if you look at the depreciation, the bank will primarily or probably want to look at then adjusting those, have them work with you and the SBA, and you can probably get a larger loan dollar amount by allowing the adjustments to occur.
Okay.
Just thought that was what was discussed in a meeting I attended on Monday. So again, the lender has a lot to do with the amount of the loan that's allowed. So if you don't include the cost of operations, you're probably not going to get a large amount of loan, maybe much smaller. Again, if you don't need that large of a loan, don't need the extra money, why borrow it? Also, you got to meet lender approval. And again, like I said, they may be able to adjust all of those amounts, getting SBA approval to obtain funds, increase the size of the loan figure.
Okay. JC got a question.
Okay.
It said, is there a time limit on how quickly the idle advance funds, not the loan, must be spent? Because of the PPP funds, in order to be forgiven, had to be expended, in 8 weeks. So
PPP is a much different cat. Idle? No, you just cannot spend it for business expansion, debt, principal repayments, etc. As long as it's for the business, there's no time span that I can find. Answer the question?
you got it.
Record keeping. So here comes back to that same question. If you get a PPP loan, you've got 8 weeks that you have to spend that dollars. One of the things on the PPP loans, they say use a separate bank account. I'm saying use a separate bank account for idle as well. Be sure you spend it on approved items, payroll, utilities, rent, mortgage interest expense, operating expenses. Like I said earlier, do not spend it on expansion of the business. Those breeding cows, even though they look very enticing, use the idle on things that you know qualify, and then hopefully that frees up other dollars in the bank account than to purchase breeding animals back into the system. Here's some references. JJ, are you going to make these slides available so they can access them?
We got to figure out a spot to put them, but we'll see what we can find out.
Here's some great information concerning the idle loan, what's there, the PPP loan, all the rules, how the loan forgiveness guidance on the PPP, and then the idle application is there as well. So here's some good references. We'll do our best to get those posted so you can go back and visit them. You can also go to Google and just type in SBA economic disaster, and you'll find out that a lot of these all already pop up, as well as the application. So with that, let's open this thing up to questions, your concerns, etc. If you have things that pop up later, send either JJ or myself, or send both of us an email, and we will get you some answers to your questions.